Thanks for joining us here today for our discussion on cryptocurrencies, specifically Bitcoin. It's a topic that I think everyone is aware of. There's an investment thesis behind Bitcoin. Maybe you own Bitcoin. Maybe you've been thinking about owning Bitcoin. But we kind of have three main goals here in terms of discussion. Number one, what is Bitcoin? Why it might have value? And then also, how could it be utilized in a diversified portfolio, and what the end result might be. So I have several questions, Kevin, that I'm interested in discussing here today, but we do have a presentation deck that I'm currently sharing. And this is available after the meeting. We will be sending this out to everyone who has attended, but it's available for any clients that have not attended. So if you have family members or friends that couldn't join this, but they'd like a copy of the presentation deck, just reach out, send us an email. We're also post a compliance review. We'll be putting this presentation on our YouTube channel. So if you're not subscribed to the Ausperity YouTube channel, please do so. We're sending one educational video per week. We might slice and dice this presentation up, but we're certainly going to have the presentation, hopefully in its entirety, on the YouTube channel. It's got to pass through compliance first and foremost. So the last thing I want to mention with any of these is if you have questions, please feel free to utilize the chat feature. I may not jump on it right away, but as Kevin's kind of going through and we're having this dialogue, use either the Q&A feature or the chat feature, which should be on the top panel of the Teams video. And I will try to tee up those questions with Kevin as we go. I think that's a more dynamic discussion rather than waiting at the very end. So with that, Kevin, thanks for being patient with my opening intro here. Thank you for joining today. Real quick, just quickly introduce yourself and Bitwise, and we'll kick this off here.
Yeah, Rory, thank you. And thanks to everyone that's shown an interest. It looks like there's a bunch of people on the webinar. As Rory said, my name's Kevin Walsh. I actually partner with Ausperity and Sanctuary Wealth, and I joined Bitwise a little over 2.5 years ago. I live a little north of Boston and cover the Northeast for Bitwise. Digital assets is much broader than Bitcoin. There's a variety of different elements within that subset, but we're going to focus today on Bitcoin. So what I thought I would do, and what I'm going to try to accomplish in a few minutes here, is three things. What is Bitcoin? Why does it have value? And how do we think of it at Bitwise in terms of valuation, not only today, but going forward? And then how does it fit in the overall construct of a portfolio? If that's fair, Rory, let's start with what is Bitcoin. And I'll try to translate this in English. But very simply put, most people refer to Bitcoin as digital gold. I think that's the analogy that most people may have heard or may be familiar with. But very simply put, Bitcoin is a digital monetary asset that brings money to the internet era. But that's how I would describe it if I was in an elevator and someone asked me that question. But more importantly, what I think Bitcoin has transformed, it's really brought three major changes to the traditional financial system that we actually all have grown up on. Number one, the payment rails are being replaced from the old antiquated payment rails that we grew up on to blockchains. And basically what Bitcoin has done, it has basically replaced those payment rails and made the system from being slow and expensive to being fast and cheap. So to put it another way, why should a transaction, whether it's domestic or global, take 2 or 3 days to settle, perhaps charge you a 6 or 7 or 8% commission like Western Union, when you can do that on a blockchain via Bitcoin, and that can settle in some cases just like a text message is received on your phone. So it basically replaces slow and expensive with fast and cheap. Number two, there's no central control over it. It's controlled by an independent network of computers around the globe. So unlike a central bank that can go ahead and print money whenever they feel they need to, there's a very automated, methodical process and protocol to Bitcoin that basically controls new circulation into supply. And I'll actually touch upon that in a second. And then the last element, which I don't think a lot of people realize because Bitcoin can be very mysterious, is there's a fixed supply. There's a supply cap of Bitcoin. There'll only ever be 21 million Bitcoin in existence. Currently, as we speak today on this webinar, there's about 19 million in change in circulation. In 2140, so we have a ways to go, the 21 millionth Bitcoin will be mined and come into circulation. So unlike the US Treasury that says, wow, we need to increase money supply, let's go ahead and print a bunch of money. On the Bitcoin blockchain, you simply can't do that. It's controlled, it's methodical, and every 4 years, it actually gets cut in half. That's known as the halving for those of you that may have paid attention. So to summarize what it is, it's a digital monetary asset known as digital gold. It's not controlled by any central bank or single entity, and there's a scarce or fixed supply cap to it. Let me come up for air, or see if that resonates, and then we can transition.
No, I think it's great. And even this slide, you can see here, time is money. You sell a stock, you're going to have that cash in one day. If you're wiring funds to a bank, that can take anywhere from 2 to 4 days. Bill pay can take 1 to 5 days. And with goods transitioning and crypto being moved along the blockchain, that's essentially an instantaneous transfer of funds, transfer of money. That's pretty important and powerful, whereas the sooner you have those funds, the sooner you can utilize them, but also from an investment perspective, the sooner you can start investing that. And we're not going to get into stable coins or things of that nature, but being able to get funds from somebody else sooner rather than later allows you to then start earning interest on that. And I know there's been I think what's in the works is instead of getting daily interest, it also could be hourly. So imagine that you have funds transferred to you through the blockchain, through crypto, you receive it at 2 a.m. in the morning, since that's what someone happens to send it over to you. Theoretically, that money can start earning interest immediately rather than waiting the next business day. Or if you receive those funds past 4 o'clock on a Friday, you're not going to be able to start earning interest until that following Monday. So there's a lot there, but the speed is pretty interesting.
I would agree. I mean, I when I started in this business, stock trades were T+3. Yeah. And a few years ago, they went to T+1, and we thought that was transformational, right? And now you're talking about transactions cross-border settling in the speed of a text message. So innovation is king, I guess you could say.
Yeah, it certainly is. Kevin, where do you want me to pivot next in terms of slides?
I'm going to talk to valuation, which I don't think we have a really good illustration of that. Okay. So why don't I just talk about how we think about at Bitwise, why Bitcoin has value, and then how that translates into valuation today and going forward, if that's fair.
From a visual perspective, I think this slide's interesting, and that can kind of lead into a later part of the discussion, but maybe I'll leave this here, and then you can kind of jump off on why Bitcoin might have value.
Agreed, for sure. That's a good chart, which I'll reference kind of in our last part in terms of portfolio construct and why you might not want to ignore this asset class altogether. So Bitwise was very proud. 2 weeks ago, we were actually the first firm to publish capital market assumptions on Bitcoin. No other firm has actually done that. And you can certainly follow up through Rory and his team if you'd be interested in seeing what they are. But we do feel it obviously has value, and that valuation will continue to increase. And there's a couple of factors that is based on, some of the metrics that we actually look at. One, I already mentioned, there's a scarcity element to Bitcoin. And because of on-ramps that didn't exist more than 2 years ago, the consumer has much more access and much more ease to go ahead and incorporate Bitcoin into the overall construct of their portfolio. What I mean by that is, if we had this webinar or discussion 5 years ago, really only access to Bitcoin was to do it at your kitchen table on a computer or on your phone and through a hot wallet. Mm-hmm. The SEC approved 10 spot Bitcoin ETFs in January of 24, January 11th to be specific. And fast forward today, 18 months or 19 months since then, collectively, they have been the single largest raise up in ETF history. So the on-ramps and being able to include it in the overall construct of a portfolio has definitely been a driving dynamic and has created a major imbalance between new supply and demand, which I'll get to in a second. Number two, Bitcoin does have a utility, in some cases, unlike gold, right? So as I mentioned, folks look at this as digital gold. Why would people buy gold? Perhaps they're worried about a devalued dollar. Perhaps they're worried about inflation, but you can't send gold globally transmitted across the border. Bitcoin basically solves, in a lot of cases, the same thing gold does. So it does have a utility, it does have a store of value to it, but unlike gold, you can actually make global transactions, as I referenced, in a very efficient.
Yeah, but I'm curious about that. Could you speak to that more? Because the thesis for gold is an inflation hedge. So I'm interested in your thoughts on cryptocurrency or Bitcoin as an inflation hedge, but then also gold has been a kind of non-correlated asset to the traditional stock, bond, cash portfolio. Can you speak to Bitcoin there as well?
Yeah. Where I'm going to ask you to go, I don't have the slide deck in front of me, but I think there's a correlation slide, maybe the next one. Yeah, right there. And I'll actually speak to the correlation to gold. Just like I think folks in a lot of cases look at Bitcoin similar to gold, right? It can be a hedge against inflation. And I think that's reflected in the fact that currently 185 publicly traded corporations now have some allocation to Bitcoin on their balance sheet.
Wow. Now, okay, so again, sorry to keep interrupting.
Nope, not at all.
Did you see that really jump because of now ETFs and the ability to access, or was that occurring well before the creation of ETFs to be able to easily purchase Bitcoin?
I think that's a dynamic, but I think there's a bigger dynamic. So this year, the accounting rules changed for corporations. And simply put, the Financial Accounting Standard Board actually changed the way corporations can treat Bitcoin on their balance sheet. Prior to the change, it was break even at best, meaning if you had a purchase of Bitcoin and it declined in value, you actually had to mark it down on your books to whatever that current value was. But if it actually went back to purchase price or even exceeded purchase price, you were capped at purchase price. So you could only carry that on your books at purchase price or less. They changed that into 2025, where now you can mark to market each quarter. So if it does increase in value, it's beneficial and accretive to your earnings. So in that case, it's much more attractive for corporations to hold Bitcoin. And then to your point, which I think is a good supporting one to it, a lot of these companies don't know how to custody it on their own. So they can go ahead and buy the ETF. So the ETF makes it easier for them to consume it, but the accounting change actually makes it more beneficial, if that makes sense.
And you're seeing both. You're seeing the wallet, digital wallet, and you're also seeing the ETF utilized by corporations?
Yeah, I think it's probably a combination of both, depending on the technology savvy of that particular corporation. I'll also add in another element from an institutional standpoint. You're starting to see endowments add Bitcoin to their overall portfolios. And I'll reference three because they're a little bit different. Emory and Brown University both bought spot Bitcoin ETFs. Mm-hmm. Harvard University is buying Bitcoin direct. But two Ivies in the last 2 quarters have actually added Bitcoin to their overall endowment allocation.
What do you know what percentage, or you just saw the buy orders come in?
I don't know the percentages, but we'll get to that at the end. But yeah. I think in general, I think this is an asset class that is warranting a 1 to 3% allocation, depending on where you're putting it in your overall asset allocation, where it sits. But I think 1 to 3 is generally where we're seeing. And then the other part you mentioned, which is on here. In general, Bitcoin has low correlation, not just to gold, right? It's basically a 0.2 correlation to gold, which is not on the slide. But if you think about most US portfolios, and it's definitely worked, the S&P 500 has been a very hard benchmark to beat, not just domestically, but globally. And it's been dominated by particularly 7 stocks, which we all know which they are. And if you look at the correlation to Bitcoin here versus the S&P 500, you can see it's basically about 0.46. And that's relatively low. So in general, people are adding Bitcoin because it behaves very differently than not just the S&P 500, but also the fixed income allocation. So on the bond side of the ledger, it's actually negative. So it can be a good diversifier.
That's great. So we talked about the corporations a little bit in terms of how they're accessing it. What about the custody and owning of Bitcoin? How secure is that? Because before, I think it was confusing and it was difficult. And we've heard the stories of, you lost your passcode and you now cannot access and get your cryptocurrency. And, there's a hard drive, I think, that was lost by an individual, and he's now raising money to buy a landfill so that he can try to find a hard drive that he accidentally threw away that had his Bitcoin key in there. So can you speak to how secure is it? And for, let's say, a traditional investor, if they wanted to get access to cryptocurrency, can you just talk through security of that and maybe the differences between the wallet versus the ETF?
Yeah, great question. And then before we leave this valuation, where I want to talk about the current imbalance between new circulation and supply versus the demand that has actually existed through the first 8 or 9 months of this year. So remind me, because I think it's an important point. The security point is a really good one. And I think in a lot of cases, it comes down to the individual. How comfortable are you with the technology process and protocol and platform that you're currently dealing with. I think it's worth noting, because in some cases, I think the media misrepresents this element. The Bitcoin blockchain has never been breached. Some of the exchanges that folks actually have gone into have been breached. So that's a big distinction. Bitcoin has never been breached. Some of the exchanges you can access it on have been breached. So if you're very comfortable as an individual with technology and navigating that process of doing it on a hot wallet, or you could put it in cold storage, right, to take it off of the internet, I think that's totally fine to go ahead and do that. At Bitwise, that's certainly a prudent way to get access. The benefit of the ETF is, I think, number one, you have now institutional quality custodians that I think the fear factor has really diminished. Coinbase Institutional is the largest. They actually custody 6 of the 10 publicly traded ETFs currently, Bitwise and BlackRock in particular. Number two, you have household names and money center banks that are now getting into digital asset custodianship. Bank of New York Mellon was the first money center bank to actually get approved to custody. Goldman Sachs is behind them. So you have pedigree firms that are actually going down this road. Cantor Fitzgerald's another one. They were actually the first firm to actually launch a lending platform off of Bitcoin. So now in some cases, you can use your Bitcoin as collateral to actually get a loan off of that. So it's really evolved in the last couple of years to being somewhat of operating in a cloak to much more transparent with institutional quality partners participating.
Okay, great. And then a reminder to get back to supply imbalance.
Yeah, because I think this is an important part of the valuation. Because I think the question we get asked a lot is it too late? Bitcoin has had a good run. And if you go back to the prior slide, you will see that in the last 10 years, it has been far and away the best performing asset over the last 10 years, better than US equities, better than gold.
Yeah, the numbers are almost unbelievable in terms of the 10-year number, the 5-year number, but even speaking to the 1 and the 3 year as well is really outstanding.
It is. And there's a dynamic behind that we think will continue, as I referenced. The huge imbalance between new supply and demand that's out there, whether it's governments like the US, Japan, Brazil, whether it's the 22 states currently in the US that have legislation to purchase Bitcoin, 2 are already doing so, Arizona and New Hampshire, whether it's the corporations which were referenced, now 185 in number, whether it's the endowments that I referenced. If you look through August, and I won't bore you with the protocol of Bitcoin circulation, but through August, there were 85,000 new Bitcoin that came into circulation in 2025, 85,000 new Bitcoin into supply. If you look at just the ETFs, they consumed 125,000 Bitcoin. And corporations, as I referenced earlier, they consumed 250,000 Bitcoin. So between ETFs and corporations alone, no governments, no endowments, et cetera, there were 375 Bitcoin consumed with only 85,000 coming into circulation.
Wow.
And as it becomes more mainstream and people become more comfortable with adding it to a portfolio, we anticipate that imbalance will continue.
Wow. It's pretty interesting. I mean, to answer that question, or at least to think through that, are you too late? How much more room does Bitcoin have to run? I was fortunate to attend an industry conference last week, and one of the speakers was actually Bitwise's chief investment officer. And that question came up, and his answer to it was, raise your hand if more than 50% of your clients own Bitcoin. And hardly any hands went up. And these were financial advisors, financial planners, independent advisors. And he said, until all those hands go up, you're not too late. The demand for Bitcoin and the value case moving forward is so great that it really has been minimally adopted by the consumer. So just because the performance has been great, but that's natural. I mean, everyone's just like, am I buying it at a high, theoretically? And that's the question. We don't know because we don't know the future. But I think that's a question that I get back from clients that are questioning, okay, making an investment into it.
Rory, I think that another analogy I'll use is timing is a tenuous question. But last year, the S&P 500 hit 56 new highs. And I don't know how many new highs it's hit this year, but it's several. So you could make the same question as to buying US equities. But if you look at our work and you look at the capital market assumptions I referenced, Bitcoin is starting to disrupt and steal market share from a variety of different pools that it actually didn't participate in before. We mentioned a lot of those. Our models basically say if in 10 years, it's very viable that Bitcoin could go, right now it's about 113,000, I think I saw it this morning. It could easily go to 1.3 million a coin.
Per coin?
Per coin. And that's, if you listen to Tom Lee or if you listen to Kathy Wood, that's somewhat consensus. So if we are right, you're not too late.
Wow. I mean, the other pushback when I have discussions with our clients at Ausperity about Bitcoin and whether we invest into it or not, or whether they do, is somewhat, I don't understand it. So I don't want to invest in something that I don't understand. And you did a very brief, broad overview of blockchain and crypto and Bitcoin, but I feel the same way. It's difficult. For some reason, it doesn't just sink in. It's not easy for me to rattle that off my tongue. But I heard about another presentation because I'm fascinated by cryptocurrencies and Bitcoin, and I'm trying to learn as a consumer. And it was, okay, the counter to that is, how much do you really understand of what you're already invested into, right? You take Tesla, for example, and you might own shares of Tesla. Do you really understand how you get these cars to run and operate without gas? Or do you understand what semiconductors are, yet alone you own NVIDIA? Do you understand how an airplane stays in the air and you own Boeing stock, for example? It really made me think differently about that. I'm curious of your reaction to that. And I would have to assume you get that question as well, or that pushback. That's the reason to not invest into Bitcoin or crypto is, well, I don't understand it. And per Warren Buffett, I only invest into companies that I know and I understand.
We get it a lot, as you alluded to. And I think a lot of the points you made are valid. In some cases, we don't have a full grasp of what we actually own. I think of it this way, and I obviously am work at Bitwise and I'm very familiar with it. But what do I consume or use in my daily life that maybe I don't understand? And I landed on text messaging. I have two daughters. We have a group text, and there's a lot of them, and I have no idea that when I say whatever I say, how they get it, but I have no fear in using it. So I think it kind of fits into your theme that you were referencing earlier. I think text messaging is something none of them really understand, and how do they receive it, but it's part of your daily lives, and you use it constantly.
Yeah. So I mean, how should investors think about it? How can this be utilized in portfolios? I think is a major aspect of this discussion. What we see here is that if you've owned Bitcoin over the last 1 year plus, it's been additive to performance because those numbers far exceed that of US stocks, gold, developed international markets, emerging markets, and then also oil. And here is something where, well, how much do we put into it? And that's where this slide kind of gets into. And I'd like you to kind of take us through the slide. So it looks a little bit busy when you first kind of look at it at a glance. And for everyone who's listening, that they're seeing this slide for the first time. But talk through the use case for Bitcoin in a portfolio, a diversified portfolio.
Yeah, that's a great graphic. Thank you for sharing that. And this is fairly vanilla, but I think it will get the point across. So this is basically just to define the period. This is the last 10-year period. It assumes that you actually did quarterly rebalance back to whatever your baseline allocation initially was. So if you look at the first green banner, it's a traditional 60-40, right? That means you had 60% in the S&P, you had 40% in the ag, and you can see over the last 10 years, you had a cumulative return of, I'll round up to 97%. That's annual.
Just clarify, the ag is the bond market. So 60% US stocks, 40% US bonds is your 60-40? Because I know that's classified differently sometimes.
That is correct. Yep.
Okay. Yep.
With an annualized return of 6.2, and then you can see annualized volatility, which is a measure of standard deviation, which is 8.5%. So 60-40, no Bitcoin exposure. And then as you work down the progression, and I think let's go to 2.5.
Sure.
Let's go to the middle. And the first point I would make is, if you add 2.5% of anything, whether it's Bitcoin or something else, you're not completely disrupting your current allocation, right? So let's assume where you sourced it from. You took 2.5%. Let's say you kept 58.5% in your S&P 500, and 39% in your fixed income exposure.
Sure.
You really didn't disrupt that. So you did that, you put 2.5% into Bitcoin. Your cumulative return, you can see, went from 96% in that 10-year period to 148%. Your annualized return went up 220 basis points. So the return profile certainly looks very good, but there's no free lunch. And as we know, Bitcoin over time has been a volatile asset.
Yeah.
In isolation, it's certainly volatile. In the construct of a total portfolio, that volatility goes down. Case in point, last year, the volatility profile on Bitcoin was the same exact volatility profile as NVIDIA, Tesla, and Meta.
Yeah.
A lot of people own those names. So that's measured. You can see the standard deviation or the volatility. In a 60-40 with no Bitcoin, you're at 8.5% a year. And adding 2.5% Bitcoin while incrementally increasing your return 220 basis points, your volatility only went up about 4.4%.
That's powerful. Now I got to push back a little bit because we're using a 10-year number. Back to the previous slide, that 10-year number is at 33,000%. Now, you think Bitcoin might go to, I even forget what is the Tom Lee target?
It's the Bitwise target that Tom Lee stole. I'm kidding. 1.3 million is our baseline case.
Over what period of time?
That's through 2035, a 10-year period.
Wow. Okay. So you are expecting big numbers and big returns. With that said, those are lofty goals. That's a massive increase. This is actually what's interesting to me, is that you don't see a significant increase in fluctuation of your portfolio. And I've even noticed that as the returns have come down to earth, quote unquote, a little bit over the last 1 year and 3 year, the volatility has as well. There's some significant swings, but it's not experiencing some of these halvings and these drops of over 50% that occurred in 2022, 2023. Is there any thoughts or expectation that volatility might continue to narrow a little bit here, or what?
We would concur with that for sure, Rory. And it's mainly because of the on-ramps, as I referenced earlier. 5 years ago, you didn't have an ETF. You didn't have institutions like BlackRock, Fidelity, Bitwise in the market every day trafficking in Bitcoin. It was primarily driven by individuals doing it on their own. So the ownership and investor profile has really transformed into more mainstream. So with that, you would assume volatility would come down and decrease. And as I mentioned, it's been in line with those 3 Mag 7 stocks that a lot of folks owned last year.
Great. Thank you for that. Yeah, this is a great graphic, great compelling document. I'd be interested in even looking at a 3-year rather than a 10-year, just kind of looking through that type of stuff. This is our last graphic as it relates to being a part of the portfolio. Kevin, why don't you take this one away as well in terms of what we're looking at on this screen with this chart?
Yeah, this one's a little busy, but actually it does speak a little bit to, Rory, what you just referenced. I'd rather see it on a 3-year period. What this basically looks at is this is a 5% allocation to Bitcoin, so a little bit heavier than the 2.5 we referenced, and it looks at a 10-year period. But instead of looking at it just over a 10-year period, it looks at it in rolling 3-year increments. And in rolling 3-year increments, you can see the win rate is 100%. It actually has never had a negative contribution to a 60-40 portfolio over the last 10 years in rolling 3-year increments.
Wow.
A little bit of a busy slide.
Yeah, it is. Super. Okay, just doing a quick check of the comments and Q&A. Looks like
I'm going to make one more point if I can.
Yeah.
Because I think what's important is regulation and legislation has changed.
Whoa, are you reading the question?
No, I can't see the question.
Well, we got a great one from the audience here, from the viewers. So here's the question. What is your view regarding future government regulation and the implication of potential regulatory changes, especially as it relates to the use of cryptocurrency for illegal activities? What is the risk that governments regulate crypto such that they become essentially useless if we're looking beyond the Trump administration?
Yeah, there's a lot of there's a lot of moving
parts.
So
let's break that down. View of regulation regarding future view of government regulation, and let's just go as it relates to the use of cryptocurrency for illegal. Let's kind of part that out.
Yeah. So And then I think there was a connection to the Trump administration, right? So maybe I'll start there also.
It's just essentially saying governments have to or start regulating cryptocurrency so that, and that could drive them useless if it's beyond the Trump administration. So essentially, let's kind of two-part this. First part, government regulation based on the implication of potential regulatory changes as it relates to the use of cryptocurrency for illegal activities. Let's start there.
Yeah, so there were major changes a few years ago that made the anonymous ownership of Bitcoin become much more transparent. And Rory, you know at Ausperity that when you're conducting in U.S. securities, there are what are known as AML, anti-money laundering laws, and KYC, know your customer. Right. And a few years ago, any platform that transacts in Bitcoin now enforces that. So that basically pulled the veil over, so you can't really conduct in anonymity like you could prior. Second, I would say that's kind of a stale narrative as Bitcoin has evolved and become more mainstream. If you think about it, Bitcoin is an immutable ledger. So if you know the protocol, you can follow the history and the trail of every Bitcoin. It's actually a terrible tool for criminals. And there's much more cases of money laundering in US dollars than there is in Bitcoin. Okay. And that's connected to that change in regulatory rules of applying AML and KYC to the overall transaction.
Yeah.
Number two, I don't think it's attributable to the Trump administration. Bitcoin is now 15 years old. You saw the returns, you showed them before. That
yeah, I don't think that's the point. I think they're saying looking beyond Trump, more so the risk that governments regulate cryptocurrency.
I mean, Bitcoin would be very hard to regulate because it's not, they can't control it, right? It's controlled by a network of computers around the globe. Mm-hmm. And I would argue that the SEC prior to the Trump administration had a chokehold on it. I mean, in some cases, it's almost surprising that it survived through the Gary Gensler SEC administration. Mm-hmm. And you had a lot of obviously bad actors in the space. There were obviously well-noted media events that took place, and it continued to thrive, exist, and now I would argue almost on the verge of flourishing. So because it's not controlled by a central bank, it'll continue to exist. And I would argue that, the SEC was very, very anti-crypto in general prior to the current administration.
Yeah. Let's stay on government. I have a follow-up kind of question on what's happening with governments and in terms of them holding crypto, storing crypto, building reserves with cryptocurrency. Any update there?
Yeah, for sure. The first main piece of legislation that was passed was called the Genius Act. That passed 6 or 7 weeks ago, and that applied directly to stable coins, which we don't need to go into today, but that, it brought a framework and regulatory aspect to how they operate. And that was really supported by an IPO called Circle, which is the second largest stablecoin issuer, went public 6 or 7 weeks ago and is up 4 or 5x from the initial price. The second is the Clarity Act, which basically is halfway home. It actually passed through the House and now sits in the Senate. But like the Genius Act, the Senate was very, very bipartisan. I want to say that the Genius Act through the Senate passed 68 to 32, I believe. So we're anticipating it'll pass. And that brings a regulatory framework to crypto overall. And more importantly, who is going to regulate it? Prior to this, the SEC would give you one answer. The CFTC would give you another answer. There was no real structure as to who the governing body will be. The Clarity Act actually changes that and brings it hard and fast. What was the second part of your question, Rory?
Just our government's building crypto reserves. I mean, I think you hear about certain countries utilizing it, Venezuela, for example, more than others. Like what's the U.S. stance? I mean, I have heard that the U.S. has been building crypto reserves. I mean, are they buying it, or are they just keeping what they take from criminal activities? What's the thought there? And then maybe even pivot that into corporations, because I know some major industry leaders in various different industries, the Jamie Dimons of the world, have actually changed their tune on being anti-Bitcoin, and now they're kind of pro thesis for Bitcoin as a part of the portfolio.
Yeah, all good questions. So the U.S. has attempted to establish a strategic Bitcoin reserve. The details to this point are a little bit fuzzy, but you referenced it earlier. They hold currently about 200,000 Bitcoin. Under the prior administration, that was going to be sold blindly into the market. That stance was reversed. We currently hold 200,000, and the details as to Will we accumulate that, and in what framework? Still needs to evolve. What is clear is you can't actually increase the budget surplus, and you can't actually make it a burden on taxpayers, right? You can't do that. So how do you accumulate it? When I heard Hester Pierce speak from the SEC, one of the ways they're looking at it is the U.S. has several different reserve assets. Gold is obvious. Oil is another one. I was not aware of this when I heard the talk, but we actually have a cheese reserve. You could actually move buckets. You could say, wow, instead of holding all gold, we move it to Bitcoin. Instead of maybe sell some of our oil reserve, maybe sell some of our cheese reserve. So the details are still there, are yet to be worked out. But I think that will happen over time. Brazil and Japan have actually followed suit. They're starting to do the same thing. I mentioned states. 22 states currently have legislation to do so. Arizona and New Hampshire are already doing it. And you, as noted, corporations are doing the same. And they're holding it on a balance sheet, and maybe perhaps instead of cash, right? Especially if rates continue to come down, and your money market rates go from 4% to 2%, Bitcoin might become more attractive because you might be able to get a better return. You're not going to put all of your cash reserves in Bitcoin, but companies like Microsoft and Meta that have huge balance sheets are starting to put that as an agenda item on their shareholder meetings. It doesn't mean it'll happen, but if a company like Meta put 50 basis points of their cash reserves in Bitcoin, that would be a fairly substantial number.
Well, as we start to round out the hour here, I wanted to talk about, well, how much and how should investors think about allocating to Bitcoin if they're going to do so. I'm going to share my thoughts and how I have those conversations with clients at Ausperity. I'm curious of how you answer that question. When you have an investor or you have a financial advisor that reaches out and says, hey, we want to incorporate Bitcoin, how much should we allocate towards Bitcoin? But then also, what's the process for doing so? How should we evaluate it? There was rebalancing that was on the previous slide. Talk me through that. How do you answer that question, Kevin?
Yeah, it's a tough one because every investor is different. Every portfolio is different. And I think it really comes down to what you currently own and what you're trying to achieve, right? At the end of the day, I think that's the bigger question. Like case in point, fixed income, your exposure shouldn't look the same, right? If you only have 20% fixed income and 80% equities, the fixed income sleeve shouldn't look exactly the same as if it was reverse that. But if at a high level, or I think most investors, as they dip their toe and get more comfortable with digital assets, whether it's Bitcoin or not, they start with an allocation of 1% to 3%. Mm-hmm. The pushback to that is, if you go to the next slide, is, well, I mean, is 1% of anything going to make a difference? Not that one. Actually go two up, perhaps. It actually has a 64. There we go. So there's a 1% allocation, and over 10 years, again, it doesn't mean the next decade will look exactly like the previous, but you did increase your annual return by 90 basis points by simply making a 1% allocation. The second thing that's part of this question, I believe, is where are you sourcing it from? Am I taking it out of equities? Am I taking it out of fixed income? If I have an alternative exposure, is it living there? And I think that's a part of the equation too. But at a high level, without those details I mentioned, I think 1% to 3% is a jumping off point, and definitely getting off zero.
Yeah, fair point. I think for us, what we're thinking through at Ausperity, and we're starting to have these conversations, that we want to have the conversations with clients. And I think that's somewhat going to be a personal choice because of the volatility that we've seen with Bitcoin. But it's something that I follow the data, and the data supports, per this slide, Bitcoin having been additive to growth and only having a minimal impact on volatility, depending upon how much of it you utilize. So I kind of find myself having the discussion with clients, and yes, somewhere in that either 0.5% to 3% range. But here's the important part, and this is where some clients have actually, through discussions, said, no, I don't think it's for me. Many of our high net worth clients, they don't need it. If they never own Bitcoin, they're still going to achieve their goals. Everything's going to be fine. And that creates a source of stress and anxiety. It may not be needed to be part of the portfolio. At our core, how we run wealth for clients and portfolios for clients is a rebalancing strategy. So what I share with clients is if we make the decision that we're going to allocate, say, 1% to Bitcoin, that's our target point. That's the bowling ball, so to speak. And then the Ausperity bumpers come into play. So when we see Bitcoin go on a big run, which hopefully it does, hopefully after any client invests in Bitcoin, it goes up in value tremendously. We're going to be calling and we're going to be taking profits. That could result in some taxes because of capital gains. But here's the big part is but maybe in all likelihood, when Bitcoin goes through another sharp decline, 30%, 40%, 50%, we'll be calling that client back and purchasing more and saying, okay, Bitcoin's just dropped 40%. We're going to be buying more Bitcoin to get you back to that 1% target allocation. And if that is a phone call where you're going to have anxiety or you are thinking, now maybe Bitcoin's not for me, then we shouldn't invest in Bitcoin in the first place. Is if you're not prepared to buy during some of those dips, because as you see in this chart, and this actually doesn't do it justice because it's 10 years, but some of those drops that Bitcoin has experienced has been really dramatic and really sharp. And I think from a roller coaster perspective, it's hard to stay on that roller coaster when you're experiencing those. Everyone enjoys the wins and the highs, but many times that loss has got more of a emotional impact. So that's how I frame it with questions. That's how I think you should think about it is, okay, make it part of the allocation, rebalance back to that. Take profits when it rises, bring it back to your target allocation. When it falls, you got to be prepared to buy more. Is this a long-term investment or is it a trade? If you think about Bitcoin as a trade, I think you're setting yourself up for a huge roller coaster ride and potentially disappointment. If you believe in it for multi-year case, then you're in all likelihood going to have periods where you're a buyer of Bitcoin and you're a buyer in a weakness, and hopefully you get the recovery. That's my thought.
I would agree. It ties in directly, Rory, to the old quintessential remedy to investing: buy low, sell high. And sometimes that's counterintuitive to what we want to do. It becomes uncomfortable, but that's where rebalancing is very, very effective.
Super. Well, Kevin, I'll turn it to you in case you have anything else that we missed that you want to close with. But I think this has been a very healthy discussion, one we're probably going to have more of with clients, try to provide more education on cryptocurrency, Bitcoin. How does it relate to investments and should it be part of your portfolio? So I thought this was great to kind of go broad on what is Bitcoin, but hit a little bit more on, well, what has Bitcoin been doing? How do you get access to it? And then also, what does it do when you add it to a portfolio? We've kind of hit on all of those things, and that was my goal for today's discussion. Kevin, I'll leave it with you. Is there anything in closing remarks, anything that our clients should be aware of, or how could they continue to learn a little bit more about cryptocurrency and Bitcoin?
Yeah, as you alluded to, we kind of closed where you opened, Rory. We have a great partnership with Ausperity. They're a fantastic wealth management team. And as I referenced about Bitwise, we're all about education. We've been pioneers in the space. We have a ton of educational resources. We have a Bitcoin library that's very, very informative. If anyone would like access to that or have any questions, by all means, there's no questions that are out of bounds. This is a very complex asset class, and it changes at the speed of sound. So I firmly believe it deserves a specialist that's only focused on this each and every day. So we partner with Ausperity to answer any questions, regardless of what they are, to help with your comfort level.
Super. Well, for everyone who joined, thank you. If you have follow-up questions that you want to send in a one-off, happy to toss them to Kevin and the team over there at Bitwise. Kevin, thank you for taking some time to walk through this with us. This is a fantastic slide. It was a great discussion. Hit on my goal of bringing clients into more of the educational aspect. I think there's a lot more to come, and look forward to connecting with you again, Kevin. Thanks.
Likewise. Thanks a lot.